Homeowners associations across the United States are facing a growing challenge that's reshaping how they operate and impacting homeowners' wallets: rising insurance costs. This trend is being fueled by several factors. Climate-related risks, aging infrastructure, and shifts in the insurance market are all contributing to the problem. As a result, insurers are either dramatically raising premiums or exiting the HOA market altogether. The impact of this insurance crunch is being felt nationwide. From Florida's hurricane-prone coastlines to hail-prone states like Minnesota and Colorado, HOAs are struggling to secure affordable policies. This is especially true for covering communal areas such as clubhouses, playgrounds, and shared roofs. Let's look at a specific example. In Lakeville, Minnesota, an 84-unit HOA saw its master policy premiums quadruple since 2021. Their annual insurance costs jumped from manageable figures to $236,000. What's particularly concerning is that this community hadn't suffered significant damages during this period. This illustrates how insurers are raising rates based on potential future risks rather than actual claims. These insurance hikes often translate to increased monthly fees for homeowners. In the case of the Lakeville HOA, monthly fees doubled to almost $700 per month. The situation is even more challenging in coastal regions like Florida and Texas, which are particularly vulnerable to catastrophic events like hurricanes and heavy flooding. These areas are at the forefront of the insurance crisis. The 2021 Surfside condo collapse in Florida exacerbated the instability in the HOA insurance market. This tragedy highlighted the potential risks tied to aging infrastructure and brought increased scrutiny to condo associations nationwide. As a result, insurers tightened underwriting standards, increased premiums, or in some cases, chose to leave the market altogether. This change has been most acute for multifamily developments like condos and townhomes, which often rely on master policies to ensure both exterior and communal features. For many condo owners, these rising costs are making the dream of homeownership tougher to attain and keep. HOAs are left with few options to address these rising insurance premiums. They must either pass the added costs on to members through increased monthly dues or reassess what their policies cover. Some communities are opting to cut back on coverage, shifting costs of interior repairs to individual condo owners. While this approach offers short-term relief for overall HOA fees, it raises individual costs and complicates matters after a disaster strikes. Another common stopgap measure is deferred maintenance. Many HOA boards are choosing to delay essential projects like road repaving or roof replacements to avoid further fee hikes. However, this strategy risks creating more significant and costly issues down the line. The challenges aren't just financial, they're also creating a drag on the housing market. With about 74 million Americans living in HOA-managed communities, the financial and logistical difficulties tied to rising fees could deter potential buyers, affecting property values. In areas like Houston and Jacksonville, sluggish condo sales have already begun, signaling a wider issue. While there's no magic fix for these insurance hurdles, communities can adopt strategies to mitigate the impact. Proactive risk management is key. HOAs in disaster-prone areas might consider reinforcing structures for resilience, such as installing hail-resistant roofing or improving drainage systems. These steps not only protect properties but also reassure insurers, potentially curbing premium hikes. Regular policy reviews with brokers are vital. Boards can confirm they aren't overinsuring, explore group policies with nearby associations, increase deductibles, or eliminate overlapping coverage. Transparent communication with homeowners is also critical, ensuring they're aware of budget constraints and involved in major decisions. Lastly, fostering healthy reserve funds through long-term financial planning can allow HOAs to weather unexpected hurdles without entirely relying on fee increases. While building reserves takes time and discipline, it offers tremendous stability when sudden costs emerge. Rising insurance premiums reflect our changing environment and shifting realities in homeownership. For those living in HOA-managed neighborhoods, adapting to this new normal is crucial. While insurance costs are unlikely to drop drastically in the near future, better risk management and collaborative financial strategies can help these communities achieve stability and maintain property values. The challenge isn't just about adapting to costs, but finding ways to preserve the shared sense of community that makes HOA living desirable. By planning ahead and addressing these issues together, HOAs can protect not just property values, but also their residents' peace of mind in the face of this evolving landscape. Thank you for tuning in to Insurance News. We hope this information on HOA fees and the impact of natural disasters has been helpful. Have you experienced changes with your HOA dues? We'd love to hear your story. Share it with us in the comments below. And don't forget to hit that subscribe button. Stay tuned for more insightful insurance news.